Hello, so this is the lecture that summarizes a lot of content from the book about corporate formation and the differences. So what I've done is I've created this chart for you. We did it on the board, but I wanted to give it to you again. So these are the key points. So remember, on this continuum, you need to understand the taxation implications of each entity form, the liability, requirements, the formation issues, and then any miscellaneous ones. So I'm not going to spend a lot of time on this because we did spend almost an entire class period building this and talking about it in depth. On taxation, the key is to remember that pass-through means that all profits and losses go straight through onto the personal income tax returns of the owners, whether they're partners or members or a sole proprietor. With a C corporation, you have the double taxation. That means at the corporate level, and then those distributions are again taxed at the personal income level. Liability is important because it's all about how much of your personal assets are at risk. So with a sole proprietor and a partnership, and then for general partners, all of your assets are at risk. That's why Arthur Andersen doesn't exist anymore. With a limited partnership, if the limited partner truly is a silent partner, an investor who does not manage, then their liability is limited to their investment. Under LLP, innocent partners, that's an IP, have limited liability because they weren't involved in whatever that wrong action was. So the innocent party has their liability limited to their investment. With the LLC, the S corporation, and the C corporation, it's all limited to investment. Formation, you don't have to do anything under a sole proprietorship or partnership, but I would always recommend a written partnership agreement so that you've just established how are we going to dissolve, can we sell our interest, those types of things, buy-sell agreements. But remember, with a partnership, it's two or more individuals coming together for the purpose of making a profit. You don't ever have to make a profit, but you're just engaged in business for the purpose of making a profit. LP has to register with the Secretary of State and have LP in the name. LLP has to register with the Secretary of State and have LLP in the name. LLC has to register with the Secretary of State and have LLC in the name. With an S corporation, remember it is first an LLC or a C corporation that then you elect to check the box and be treated as an S corporation, which means you get that pass-through taxation. The form you're going to file is a Form 2523. And then a C corporation is going to register with the Secretary of State and have corporation or incorporated in the name. Under that miscellaneous column, I have the self-employment tax, which is an issue for sole proprietors and for partners. And then it's an issue for the managing member of an LLC. For everybody else, they don't pay the self-employment tax. And then for an S corporation, remember, it's limited to 100 shareholders, and you cannot have foreign or trust shareholders. C corporations, there really isn't anything. The other thing you could pay attention to as well is what happens to end the company. So for a C corporation, you have perpetual life. It's not going to end with the death of a partner or disability or bankruptcy or things like that. It's going to continue because it's a fictional person. So we talked about a lot more in class. Chapter 40 is definitely important. You got to think about franchises. You've got to think about cooperatives. Remember, those are an exception that are created to the antitrust rules based on the fact that farmers need to come together. But here's the kind of the crux. So there's a lot more in chapters 41, 42, and 43. But if you understand this, you understand the keys. All right, so I hope that's helpful, and good luck.